In today's video, I'm going to be going over is trading gambling, risk management, and how you can find consistency if day trading is anything similar to gambling. So let's go. Hello, my name is Miles. I go by Market Milli here on YouTube. I'm documenting my journey, overcoming the beginning stages of day trading and trying to become the best trader that I can while sharing tips along the way. So, is day trading anything like gambling? Or is it gambling? Yes, it is. Yes, it is. But you have to think of it like this: there are professional gamblers out there that find consistency in making a living playing whatever games at the casino. And how do they do that? The reason why day trading is similar to gambling is because, from my understanding, from books that I've read, one of the books that I've read is called Trading in the Zone. I would highly suggest reading that if you're trying to get into day trading, because that'll help build the foundation of how you should frame your mindset towards trading and not leading you to disappointment when the outcome doesn't go in the way that you desire or expect. With that being said, yes, day trading is similar to gambling because, like I said, even the best setups, even setups that have worked four times, five times, six times in a row, it doesn't guarantee that the seventh time that it's gonna go in that way. You're basically just basing it off of probabilities based on however many times you've seen that setup. What is the percentage of success does that setup give you? Now, I wanted to go over this because, like I said in my previous video, because I've been so focused on creating content on this YouTube channel before I start live streaming, so that when people are brought to my channel from my daily live streams, they could already get a sense of what I'm trying to build with my channel through some videos that they could find. But now that I feel that there's enough content for someone to find to figure out kind of what I'm trying to do. Now I want to get heavily back into day trading and put my focus back on that. Now, one of the things that I've learned to help me try to make money consistently and not blow my account fast is risk management. Part of risk management is leverage and position size. The reason I thought to do this right now as well is not only am I going through reminding myself how to do it, but one of my friends, what's up, Sean? He recently understood as well, finally, after taking a loss, why what the importance of this is. After I told him like a few weeks back, he's like, I just now I understand why you have this calculator and how you use it. So I'm happy. I'm happy that I was able to help him, and him reaching out to me is also one of the things that helped me or motivated me to want to make this channel. I'm like, okay, if I could try to help this guy and better his life, because he's helped me, because when I was selling cars, he bought a Type R from me. So I want to help him back, right? And that's just going to make me feel better and everyone's going to be happy. So why not? But first off, let's start with finding a position that I would have taken, finding the risk to reward ratio, and then we'll take a account size as an example so that I can show you what I'm talking about here. So one of the things that I've heard, which now I come to understand and agree with, is professional traders or consistently profitable traders focus more on their loss, not their win. Meaning, not meaning that they focus on the loss that happens, but focus on how much they are willing to lose before they enter a trade, and then extracting the profits as they come. And I've kind of figured that out as well, understanding that if a trade or if day trading has a percentage of it is probability, and there's no probable situation that happens 100% of the time, by focusing on how much you risk to lose, you can control. That's something you have control over. You can control how long you can make your account size last. And the importance of that is, after you found a strategy that works consistently, knowing how consistent it is based on percentage, you can determine based on your account size how long you want it to last, or how aggressive you want to get with it to try to grow it fast. That's the beauty of trading. No one's going to tell you what to do. You're in control of what you're doing, and you're in control of your finances. That could be a gift and a curse, though. That's why you have to be disciplined, and that's why you have to focus on trading psychology as one of those things that you're constantly working on as well, and not just these things on the chart and not just technical analysis. But anyways, I digress. Let's get back into this. Let's find a position, and then I'll show you what I'm talking about exactly. So how about, let's go on the daily. I'll just find one real quick. So here, downtrend, draw a trend line. Every time it touches this trend line, it seems to get rejected. One thing that I've heard is the third touch has a high probability of continuing that direction. So then why don't we take this one here, because there is first touch, second touch, and then the third touch, which provides us with a pretty decent move. But I would show you, I think I actually just took that trade, but I'll show you how I would have taken that, what my take profit zones would have been, and also what my stop loss would have been as well. So let's just circle this area here, so I know that's what we're working with. Go into the 4 hour. All right, so this is what it was. All right, so in my previous video, I mentioned that in one of my previous videos, I mentioned that the first thing a trader should learn is market structure and candlestick analysis. So how am I using market structure and candlestick analysis here? Market structure, because obviously it's in a downtrend. How do I know that? Lower highs, lower high, lower high, lower high, lower high, lower high, lower lows, lower lows, lower lows are getting created, and it's going in a downward direction. This one I think is pretty obvious. Sometimes it's a little bit more confusing, but in this case it's pretty obvious, right? And then candlestick analysis, what are we looking at here? So candlestick analysis, you could look for patterns. You could look at the individual candlestick to tell you something. You could look at the overall pattern that it's creating, the overall trend that it's creating. But here, what am I seeing? I'm seeing, like again, on the daily, the 1, the 2, and then the third touch. What am I also seeing here? Let's see. So you see here, there is an area of support or resistance, however you want to look at it. There's an area here where price gets to, and it then gets rejected. And at this point here, what happened when price broke through? It got rejected, and then it tried again, and now it's getting rejected again. So what would I have been looking at here? Based on the 4 hour, what I would have waited for to try to enter this position would have been this. I see that it entered and broke it. Based on the 4 hour time frame, I would have waited to see if this candle was or the next candle was actually able to stay above it, which it did. So in that case, I wouldn't enter right here. I would wait. As I see here, this candle. Now, what did this candle do? It pushed up, failed to make a higher high. So actually, if you look into here, which now we're taking multi-time frame analysis into account. Let's just check the 1 hour first. Okay, so now looking at the 1 hour here, based on what we were seeing earlier, right? It went up, it went down, and then it started to go back up. So because it broke through this level of what would be resistance here, what I was waiting to see is, could this flip it into support and then give it an area to bounce off of, which it didn't do that. What it did was it bounced a little bit, but then eventually broke through. And using now the 1 hour time frame, what is it creating now? What I see here is within the existing larger downtrend, now it's giving me the smaller downtrend. And where is it creating this downtrend? At a key level of resistance, because now it broke through that. So what would I be waiting for to confirm an entry? What I would be waiting for to confirm an entry could have been something like this. Wait for it to break through. And any of these you could consider really the third touch. Obviously, this one would have been the best entry because look how fast that move is. But if you're thinking of it from how much can I extract from the market point of view, any of these ones would have been better than these ones. You just have to wait through it a little bit longer. But to go short, which we're going to be selling because we're expecting it to go down, because what happened, it failed to hold above this key level of resistance, which we were wanting to see if it turned it into support, which it did shortly. But as it broke through with volume, because this candlestick is larger than this candlestick and the overall downtrend is bearish, so that's what we're going to be going with. I would have wanted to go probably this, watch it break through and see what happens there as it starts to go up, and then as it fails to push, as it fails to hold above that key level, I would have waited when that price got below here, and then that way I would put my stop loss here. A stop loss means if the trade goes in the opposite direction, where do I want the program or the market to automatically exit my trade for me? We'll go over stop losses later once I feel like I've showed enough where I want people that have been following how I've been teaching it to start trying to trade. But for now, just understand stop losses is a order that you set in the market that will give it command to automatically close your position. So that's where my stop loss is. This is where I would have entered as this candle broke below where this previous candle opened. So where would my areas of take profit be? Then you're just looking at key areas where I think that price may find some fight back. So I would look possibly here. I would keep an eye on that area. Keep an eye on this area because as you could see here, and I'm keeping an eye on this area because as you can see here, so this alone here is what, 40 pips, 60 pips. I would put one there and then put one there, something like that, or maybe I'd put it here. So now if this whole trade went in my way, so basically all I'm doing to find areas of take profit would be just kind of tracing the previous structure that was created, right? But if you're thinking, that's thinking as a day trader. But if you're thinking as like someone that might be wanting to hold a position for longer than a day or longer than a few hours, then you can look at the higher time frames and set your take profits from there. Because as you can see, there is a possibility that it goes lower. But another possibility is it could just start chopping sideways from here. That's why for me, this would probably be where I take my profits and call that a day, because that would have been an amazing win already. Because from where I entered to where I exit, that is 180 pips. Okay, so now with that being said, going into position size calculator and compounding. So say for example, you have $1,000 account and you want to do my compounding strategy of 5% a day, risking 2% per loss. You're looking to lose $20 if the trade was to go against us, and you're looking to gain somewhere in the region of 5% per day. Hopefully you can get that in one trade. If not, sometimes it takes multiple trades. But if I was to take this trade, I'm pretty sure that would have been way more than 5% gain there. So here, this is what we do. So this is a website I found. I'll share it in the description below so you can try to use it as well. Position size calculator. You just basically put all the information based on your account size, based on your risk, and it'll tell you exactly, it'll tell you how much leverage to use and position size, all of that, which is great, so that before you enter a trade, you're completely prepared for that scenario, and it'll lead to less disappointment in that case too. Okay, so what would be our entry price for this? 39,601. Account size, we'll just use $1,000 because that's what I have already here. Stop loss price 39,756. And I want to risk 2% of that account size. 2% of that account size again is $20. So look, it'll tell you exactly what you want to do. So basically, I think this is really all I was looking for, is figuring out how much leverage that I need to use to only risk 2%. But because this position size would use more than 100% of my account size, meaning I have to use leverage in order to possibly gain what I want to gain and only lose that amount that I want to lose. So 6% leverage. So you would put that in your Binance and then you would enter your trade. And if it goes against you, you know that you only lose $20 if the trade went in my direction and the way I wanted it. So based on the fact that I'm risking $20 to risk 2%, and I'm using 6x leverage on my $1,000 account, and my risk here looks like my risk to reward ratio is a 12.23 to my 1. So the 1 being the $20. So for every $20 here, the reward is 12.23 times that $20. So 12.23 times 20 12.23 times 20 equals $244.60. Now, how nice would that be? You risk $20 and it goes your way. Look how much more you have to gain. Doesn't that make you feel a little bit more comfortable? As opposed to how I used to do it before. I would enter a trade and let the program tell me, based on where my stop loss is and where my take profit is, what that amount would be, and then using the same leverage every single time as well. I think this is much better. For me, this is much better. If you have a better strategy, feel free to share it down below. But I think that for me, this is how I'm going to proceed with it. And anybody that is interested in learning from me, this is how I'm going to show them to try first, until maybe they find a better way for themselves and then learn to fly on their own. But yeah, that's all for now. I truly hope that you found value in this video. If you do, hit that like. I do appreciate subscribes as well. If you want to see future videos, I do try to live stream every day in the morning New York session. So catch me there as well. I'm open to answering any questions on there. If you have any questions regarding anything that I've shown, yeah, let's have conversations there. And feel free to check out my previous videos as well. I'll post one here beside me to the last strategy video that I posted, that could also relate to what I just showed here today. But in the meantime, have a great day. Thank you for watching my video, and I'll be seeing you in the futures. Bye.